Now, my main focus point today is about how recessions can have silver linings. And this is something I've talked about for many years, that the Federal Reserve really pushed rates too low for too long. They didn't allow enough pain in the economy, and they always provided liquidity. And, they may do that at some point. That's certainly a possibility. Something to watch for is how aggressively the Fed comes in and supports markets. But when you have a prolonged period of, say, economic growth, and let's say lack of a strong default cycle, you can get imbalances in markets. And so that's the number one upside, is recessions are actually healthy for markets. Because when liquidity is abundant and poor companies are just continuing to get new financing, it doesn't allow them to be flushed from the economy. Companies that are not very effective, not very efficient, not serving customers, businesses, or consumers very well, yet they have revenue, but it's not a great business model. It might be even a bad business model, but liquidity is so abundant that they just keep getting financing. When in reality, it's better for them, the economy, to flush them down the drain and allow those workers and those leaders to go do something else. And a lot of times too, those companies still survive in name, but the entity is refreshed, right? Where those bondholders become equity holders, you have new leadership, and maybe new leadership can actually usher that brand to actually success. Once again, and that's happened plenty of times in the past. Okay, so these downturns over the long term at the backside, it actually becomes very positive. Now, I could expand this to, the stress in the political system, geopolitical system today. I think this is very similar to, Neil Howe's Fourth Turning. I'm a huge fan of that work. And, we're in the fourth turning, and you can see the major events that are happening, from COVID now to this. And this is, I think, a watershed moment in geopolitical terms. And it's going to likely be painful, stressful, challenging. But at the end of the day, it reminds people of what is important, what you have to focus on for success, and usually come out on the backside in a better place. Both, once again, big picture geopolitically, politically, as well as economically. So these corrective periods correct many type of imbalances. And that is absolutely the number one way this can be good. Now, number two is usually early in a recession, which we're likely in, rates are higher. So you still have opportunities to lock in high rates before the Fed really cuts. And the third is there are values. There are always babies thrown out with the bathwater. Always. And so if you can sharpen your pencils, this is the time to sharpen your pencil, to do deeper dives, not just to names that because they used to go up a lot, right? That had big returns, and now they're coming down. That doesn't mean they are good values. Just because they were really high and now they're really low, that does not make them good investments automatically. They could have been way overhyped. Their competitive advantages were not really there, and a time like this actually flushes them down the drain, and they go bankrupt. So don't think that this is anything that goes down is a good value. That's not how this works. Okay, there's a lot of bad stuff that needs to be flushed, that will be flushed, and you want to avoid those. You want to avoid those value traps. But there will be names that continue in a downtrend, but their businesses, while may get weak a little bit because of the recession, because of a bad economy, their core business is sound. Their leadership is sound. Their core product or service is very sound. And they will come out of this with higher market share, better balance sheets, better cash flows. And their continue to innovate in these type of times. And so they will be better off on the other side. Those are more challenging to find. It takes more work, but you can be dramatically rewarded. Think of Amazon in the dot-com bubble 1.0. If you had the foresight to buy Amazon when it was, 2003, when everybody hated .coms at that point, and Amazon was thrown out of the bathwater, you did incredibly well, right? And there will be those names in this cycle, okay? And then lastly, at the other side of the recession, when the Fed does cut rates to probably some degree, maybe they don't, maybe inflation's too high, maybe they don't. Oftentimes you do get opportunities to refinance your mortgage, borrow cheaply, and help re-energize the economy, right? By borrowing money and utilizing those newly made dollars into the economy. So those are ways that recessions can be beneficial, but it does take a nimble and flexible mind. Don't get married to anything. Really study the facts on the ground and do your research. Don't just buy something because it used to be higher.